Okay, so Bismillahirrahmanirrahim. Assalamualaikum and good morning. Alright, last week we already covered chapter 2, which is securities market. And now on today we will go for chapter 3, which is portfolio management, risk and return. So at the beginning, I already preview to you on risk and return. Okay, risk and return, what is this one is all about. Okay, which is consists of the relationship between risk and return. So we will do some calculation and analyze which stock mana yang, which stock that having high risk, which stock that having high return. Yeah. Okay, so here are the learning outcomes. Yeah. In this chapter, you will explain the concept of portfolio management overview. Okay, so that means the keyword here is related to your portfolio. And then distinguish three types of investor risk preferences. This one we're talking about three types of people. Yeah, as our investor, yeah, as far as investment is concerned. Yeah, we will analyze their behavior regarding to purchasing the stock. Okay, the third one, illustrate the relationship between risk and return, because risk and return is interrelated between one another. And the last one, calculate and analyze the return rate based on risk level. Okay, only this part here we will done the calculation. Alright. Okay, what is portfolio management? Yeah, okay, so portfolio can be defined as the total collection of all investment. You see here, the keyword here is total collection. Yeah, total collection is some kind like a personal file. Yeah, okay, held by individual or institution. It can be a person or it can be a company. Yeah, in asset which may include stocks, bond, real estates, option, futures, and other investment products. Yeah. So what I'm saying here is, let's say a person, okay, a person can have more than one investment. Let's say they have stock and then they have savings. All right. So as a rule of thumb, there is no specific number of investment that maximum or minimum that can be held by a person. Okay, a person can hold at least one investment, and they can hold as many investment as they can. So portfolio means the combination of the money that they invested into those kind of investment product. Yeah, okay, stock, saving, and so on. Different person also have a different investment. Let's say they play forex, and then they have fixed deposit. Yeah, fixed deposit. And then they have another investment such as gold, and then property. So sometimes a person can also hold until 4 accounts. Yeah, they have 4 accounts. So portfolio is some kind like what we call as an account management. Yeah, account management. Yeah, whereby they will the accounts will be held by a person, and then the account will be managed by a person as well. Okay. So there's something in the chat box. Let me check. Okay. Alright, so therefore, the primary objective here, okay, why portfolio management is important, because to maximize gains while reducing diversifiable risk, because you want to get the best of all those investment. It means don't put all eggs in one basket. Okay, let's say it is you, okay, it is you, okay, you have a few investment, let's say 3 investment or 4 investment I can put. Let's say you have stocks, saham. Let's say you have bonds, let's say you have deposits, and then let's say you have property. All right, what does don't put all eggs in one basket means? Okay, let's say if you having losses in stock. Okay, so your investment is stock, you're having some losses, but the others have profit. Okay, the others have profit. Okay, that means even though you have 1 losses, you still have 3 profits to go. But what happens if all your money only deposited into stocks only? Yeah, all 100%. That means 100% your money, yeah, invested into stock. Let's say if your stock is having losses, therefore all your money will be losses. Yeah, it's like that. You have only one or 10 eggs in one basket, and those basket will fall, and then those 10 eggs will crack. Yeah, so we can say that what we call as all eggs will crack. That means you will get all the losses. But if you put different basket, yeah, one basket, one egg, for example, at least yeah, one basket falls and then it is cracked, you still have another three to go. Yeah, that means you still having profit from those three. You need to diversify. Diversify is, yeah, that means you need to add more investment or varies your investment. Yeah, so we can say that. All right. So that is a portfolio management means. Yeah. All right, these are the portfolio examples. Okay, we are referring to these three categories. Just an example, not a real example, just illustration only. Okay, let's say for this young and high risk investor, and then this one middle age between like 30s, yeah, or 40s, and then retired, which is old people. Yeah. Okay, so as you can see, they have four types of investment that they hold. Yeah, 60% of their money is investing into shares, yeah, 20% from property, and others in bond and cash. Okay, and it differs from middle age. Yeah, okay, 35% on shares, yeah, 35% property, and the others in bond and cash. And the last one, retired, yeah, they more on property, and then 20% bond, 25% cash, and 10% shares. Yeah, so we can say that different people have their preferences. Yeah, it is no rule of thumb that, oh, you must have like at least 65% share. No, yeah, it's your money. Yeah, it's their money. So they want to invest whatever that they want, and how much that they want. Yeah, it's up to them. Even though our money also, yeah, our money, we will decide where to go. Yeah, where will we invest? It is up to us. Okay, but yeah, provided that we need to evaluate, yeah, the risk and return first before we decided to go for that. Yeah, we don't simply like, oh, this one is let's say the saving product is good, without analyzing it, we just invest only. No, it's not like that. Yeah, there are some analysis that we need to conduct. Let's say one of them is by looking at their return, possible return, and one of them is looking of their what you call as a guarantee or something. Not guarantee, but also the safety of the investment fund, I'll say. Yeah, so different type of people have different tastes, yeah, or different preferences. All right, so let's have a look at the definition between risk and return. Okay, so the risk is uncertainty about what will happen to the investment. So these are the keywords here, uncertainty. Uncertainty means that you will not know what will happen to your money in the future, whether you will get some gain or you will get some losses. All right, and return which is gain or loss, yeah, of a security in a particular period. Okay, I want you to correct your mindset that return is not necessary to be profit. Yeah, loss also can be kind of return also, but this one loss is more on negative return. Yeah, gain is more on positive return. So that is return means what you get back. Yeah, what you get back from your investment. All right, we're going back to the risk. Yeah, uncertainty means that, yeah, how secure, yeah, okay, is it secure or is it dangerous? Yeah, okay, we're talking about your investment product. Okay, I give you one example. Which one is more riskier? Is it the normal savings account or what we call in Malay we call as scheme cepat kaya or quick and rich scheme?
Skim cepat kaya.
Scheme cepat kaya is more dangerous, right? Okay, it's more dangerous. That means it's more riskier. Yeah, because yeah, we never know. Yeah, can you imagine? Yeah, quick and rich scheme. Suddenly, yeah, they said that, oh, okay, if you invest 100 today, tomorrow you will get 10,000. What kind of logic is that? Yeah, what kind of logic is Is that okay? So you if someone offering to me that quick entry scheme, okay, you invest today 100, you will get 1,000 tomorrow, and I will ask them, how do you do that? And then if they don't have the answer, yes, definitely there is some of doubt, some doubt. You cannot. Is this questionable? Is it questionable? Okay. All right. So and as far as risk is concerned, it can also in terms of investor sentiment. Okay. Alright. Investor sentiment means that in Malay we call macam perasaan lah. That means like your guts, yeah, keberanian you. Okay. I give an example. Yeah. One of the sentiment with in gambling. Okay. Gambling ni, it is more riskier. That means high risk. So that means gambling is depend on your luck. Yeah. Kalau nasib you baik, yeah, if your luck is very good, then you will get a lot of money. But what happens if you have bad luck? Because let's say if you get one of the gambling, let's say if you play 4D, yeah, 4-digit number, okay, we don't have a prior analysis, no analysis whatsoever. Yeah, there is no analysis. So how do you want to analyze 4-digit number, and then you want to purchase that number, and then you will find out that you will certain that you will get the price. So that is a questionable. So that's why gambling also part of high risk. Remember that in chapter 1 we talking about investment, speculation, and gambling. So yeah, the safest one will be investment, and the gambling will be the riskiest one. Okay, so that is a little bit on risk and return. Okay, you're talking about how secure. Alright, some people might go for very secure fund. That means they don't want to go for high risk, and some of them go for high risk. Yeah, so it depends on the preferences of the people. Alright, we're talking about risk preferences. We're talking about risk preferences is more on the taste. Yeah, the taste, that means risk choice. Yeah. Okay, what kind of person are you? Are you going for very high risk, or are you going for the lower risk? Okay, let's have a look at those three types of people. Okay, the first one is a risk taker. Okay, risk taker, and then the second one risk averse, and the third one risk neutral. Okay, risk taker means that type of investor who are willing to accept large amount of risk. Yeah, in Malay we call it as a berani mati lah. Okay, so risk taker, someone who can willing to take risk. That means they are ready to accept the consequences. Yeah, whatever happened to the investment, yeah, relatively to a small increase in expected return. Okay, but risk averse is opposite from risk taker, whereby type of investor who is conservative. In Malay we call it as macam takut-takut ataupun malu-malu gitu, something like that. Okay, conservative, that means they are very cautious. Yeah, cautious because they are more on secure. They need a security that will expect an additional return to compensate for accepting an increase in risk. Okay, so that means this one is more on a quite brave person. Okay, this one is more on conserve. Yeah, that means conserve or reserve. Yeah, reserve person. But risk neutral is a mix between those two. Yeah, that means in the middle. Yeah, half risk taker, half risk averse, which is moderate type. Okay, if you ask me, I can consider myself as a moderate. Yeah, sometimes I'm quite brave. Yeah, sometimes I took a risk, and sometimes I'm more on conserve or reserve. Yeah, so it depends. Yeah, it depends. There is nothing wrong if you become an averse person. If there is nothing wrong if you become risk taker person, and it's not wrong also you become a neutral person. It is we call it as a investor's behavior. Yeah. Okay. Before we proceed with this one, any questions so far? Any question? Okay, any questions so far? You know, all right. How about the others? Sharif, Aisyah, Fatin, Iza, Maisara, Nazla, Emma, Zulfaqar. Okay, if there is no question, we take a short break, yeah, for 3 minutes, and then after that, I will proceed with the calculation part. Okay, we'll be back in 3 minutes. Okay, so let's continue with the next part, which is calculation. Okay, I hope that you will pay attention for this one, because it's quite easy. Yeah, I can say that it's quite easy, and you may understand later on. All right. One of the methods to analyze the return, which is holding period return, we call it as HPRM, okay, holding period return. To any investment manager, there are alternative avenues for deployment of funds. Okay, deployment of funds means that you allocate your money into the investment product. It is intuitively understood that the riskier the opportunity, the higher the return. We're talking about this one earlier in the chapter 1. High risk, high return. This is the graph of risk level. Okay, these are more on return, so the relationship will be positive. Mathematically, the rate of return is calculated as follows. So this one, return rate is equal to annual income plus ending price minus beginning price divided by beginning price. Okay, ending price usually at the end of the year. Beginning price usually at the beginning of the year. But it depends. It depends. And also, ending price means that the price that current price, beginning price is the price that prior before. Okay, divided by beginning price. And then later on, you need to multiply by 100. Okay, why? Because the answer will be in percentage. Yeah, so you need to understand, yeah, the answer will be in percentage, therefore the answer must be multiplied by 100, yeah, to get percentage. Okay, so these are the relationship between risk and return. I already told you that there is a positive relationship between, okay, so I make a mistake here. Okay, here is a risk, okay, and then it's a return. So, as risk goes up, yeah, that means a return also goes up as well. And then you notice that the starting line is here. Okay, supposed to be this one, right? Okay, supposed to be start in 0, but it didn't start there. Yeah, it start at some point. That means y interception. Yeah, y intercept. So let me tell you why it started at the y intercept. Okay, so as you see, the gap between 0 and y intercept. Okay, why is it happen? Because it is a risk-free rate that commonly associated with government treasury securities. That means this kind of return, that means the gap of return will be backed by government. Okay, backed by government. That means if you lose some money, from the investment, okay, you still have some insurance. That means your money sometimes can be, not can be, is protected, insured by government. I give you an example. Yeah, in Malaysia, PIDM. Yeah, if you watch TV or listen to the radio, PIDM, that means your deposit or your investment will be secured, and taken care of. PIDM, Perbadanan Insurance Deposit Malaysia. We can call it as a PIDM. So even though you lose some, but still, you get secured by government. Your funds, is secured by government. And then, as you can see here, these are the slope. The slope means that the return that you required return that you will get, as far as the matching of risk and return is concerned. So that is how the theory, we're talking about relationship between risk and return. Okay, this is the second formula. In the notes, I didn't put any example of it. So let's go for the study question for a while. Okay, let's have a look at question number 2. Question number 2. Okay, calculate the rate of return based on the information below. Okay, so you see here you have investment A. Okay, you have investment A, B, C, and D. That means there are four investment. Okay, all right, investment A, B, C, and D, beginning price, ending price, and annual income. So based on the calculation, which investment will you choose and why? So we have for investment using one formula to calculate all for investment. So let's have a look at the workings. Okay, question 2. Alright, so we're talking about this one, beginning price, ending price, annual income, which is related to the earlier formula, which is this one, return rate, annual income, ending price, and beginning price. So therefore, we will use this one, rate of return, that means in percentage, which is equals to annual income plus ending price less beginning price divided by beginning price, okay, and then by 100, because the answer will be in percentage. All right, no need to put four same formulas. Just put one formula for all. So in the question, you need to calculate for A, B, C, and D. Okay, so the first one is investment A. Okay, so investment A, you just put the figures here. All right, Annual income, annual income for investment A, you see investment A, investment A, annual income, you see this one, 10 cents. And then plus ending price in this column for investment A, RM2.40. And then minus beginning price, this one, RM2. Okay. And then divided by beginning price, RM2. And then multiply by 100. Okay, so if you press your calculator, remember in calculator, you don't need to rush the calculation. Okay. At the upper denominator, 10 plus 2.4 minus 2, enter 0.5, and then you divide by RM2, enter, and then multiply by 100. So you get your answer of 25%. So that is for investment A. Okay, by using the same formula, you need to calculate for investment B. Okay, same formula but different figures. So for investment B, annual income, okay, which is RM1 plus with ending price RM12.50, and then beginning price RM10, divided by RM10, by okay. Maybe I will do one shot. Just put the number first before we done the calculation. You can do that as well. If you're expert in this one, later on you can do anyways, as long as the final answer is there. Okay, investment C, annual income 150 plus with your ending price 750 minus with beginning price RM5 divided by RM5 multiplied by 100. Okay. And the last one, investment D. Okay, for investment D, annual income RM4 plus with beginning price RM28 minus with beginning price RM20. Okay, we're done with this one. Okay, let's press the calculator, running the calculator and see what's the answer we will get. Okay, so for investment B, RM1 plus 12.5 minus 10, enter, divided by 10, enter, multiply by 100, you get 35%. Next, 1.5 plus 7.5 minus 5 divided by 5 multiplied by 100, you get the answer of 80%. Okay, and the last one, RM4 plus 28 minus 20 divided by 20 multiplied by 100, you get 60%. Okay, so you got the answers already for all for investment, but you haven't complete the answers yet. Based on the calculation, that means the calculation part is done. Which investment will you choose and why? Okay, we're talking about return. That means we need to choose the highest return, the maximum return that you can get. So as you can see, there are 4 options here: 25%, 35%, 80%, and 60%. Definitely 80 is the highest one. So therefore, I will choose investment C, because it gives highest return, and you need to state the answer also by 80%. All right, because why? You see, 25, 35, and 60 also can be perceived high as well, high return as well. But we want to choose the highest one. So that's why, as far as highest is concerned, you need to state the figures as well, to support and make solidify those answers. So that is how you answer question number 2, only 10 marks for this chapter. and experience here with previous semester student, most of them correctly answer this one. Yeah, majority of them correctly answer this one. All right. So the other question that you can try later on, which is similar to this one, will be question number 6. Yeah, because we have beginning, ending, and annual income. All right. Before we proceed with another calculation, yeah, any questions so far? Any question regarding the calculation? You can snap this picture, if you want to. You may snap this picture or screenshot. Yeah. Okay. Already done, Then the snapshot, Okay. All right. No question so far. Everything okay?
No, sir.
Okay. Everything okay, All right. We proceed with the second calculation. Yeah. There will be final calculation here in this chapter. Okay. This one. All right. So, another method to calculate return by using CAPM, Capital Asset Pricing Model. Okay, so the formula is derived from this relationship. Yeah, as you can see here. All right, so the formula is indicated as follow. Yeah, KCAPM, that means return. This is the return. Okay, and then RF. RF is referring to this one, risk-free rate. Beta is B, beta, and RM is written on market. Okay, how do we get this formula? Okay, let's see. Okay, so this is your RF. Okay, this is your RF, risk-free rate, your RF. Okay, beta is referring to the slope. This one, the slope. Yeah, the slope, kecerunan. Yeah, the slope here, this one. Okay, this is your beta. And then RM, RM is your this one. Okay, so therefore, if you learn mathematics, you can find out there is if Y is equal to MX plus C, if you remember that, or Y is equals to C plus MX sometimes. Yeah, so therefore, the formula is derived from here as well. Yeah. So by using this formula, you will find a rate of return of your desired investment. Okay, end of chapter 3. There is no example in this one, but I will show you on how to do this. Okay, let's have a look at study question which related to beta, market return, and risk-free rate. Let's have a look at question number 3. I'm not doing question number 3. I'm doing this one. Question number 5. Yeah, we have beta, we have market return, and risk-free rate. Definitely, we'll go for second formula. Yeah. Okay, given below is a data consists of investment portfolio from different companies. Yeah, you have 4 companies here. ABC Senam Berhad, JKL Senam Berhad, RST Senam Berhad, and XYZ Senam Berhad. So these are the respective beta, market return, and risk-free rate. So the question here, you are required to calculate the investment return by using capital asset pricing model, CAPM. Which investment will you choose and why? Yeah. Okay. So of course, you need to calculate all this for first before you making a decision. Question 5. Okay. Rate of return. Sorry, we call it as a KCAPM. Rate of return is KCAPM. So the formula will be RF plus beta So this is the formula, RF plus beta, RM minus RF. Okay, go back to the question. ABC's number height. Or ABC Private Limited. Right, put the figures, yeah. Okay, for RF, this is the RF, risk-free rate. Okay, this one, risk-free rate. Yeah, this one is your RF. 8%. Okay, plus with beta. Okay, B beta, beta is here. This one. 0.7. And then RM, which is market return. And minus with your RF again. 8%. Alright, I will show you the detail of the calculation so you will understand how do we get that one. If you master already master in this part, yeah, there should be no problem. Yeah, that means you can do the shortcut as long as the final answer is there. Okay. The first part calculation is this one. Yeah, you need to resolve the bracket. Yeah? Okay, you need to solve the bracket. 8% plus with 0.7 and minus 8, which is equals to 2%. So that is the first part. Okay. Alright, and then this one. Yeah, you need to resolve the bracket. Yeah, you need to diminish the bracket. 0.7 multiplied by 2%. You don't have to divide by 100. Yeah, for percentage. 0.2 multiplied by 2, which is 1.4. 8% plus with 1.4. So you will get the answer of 9.4. That is the first part. Alright, sometimes the student that made usually, even though last semester, what they did was they didn't settle the bracket first. They add this one, which is wrong. Okay, this is not correct. Okay, so you need to resolve the bracket first. You need to resolve the bracket first, and then you need to multiply, and then you just add. Okay, so you need to be careful in this one. Yeah, otherwise you will feel the confused in this one. Right, the second part will be JKS number height. JKS number height. Risk-free rate 7%, plus with beta 1.3, and then RM market return 11%, and then 7%. Okay, that is the second part. And then RST's number height using the same formula. Risk-free 6%. Beta for RST's number height 0.9. Your RM 12%. Minus with your risk-free 6%. Okay, and the last one, XYZ's number height. XYZ's number height, risk-free 5%. Plus with beta, beta is this one, 1.1. 13% market return minus risk-free rate 5%. Okay. Let's resolve this one. It's 7% plus 1.3. 11 minus 7 is 4%. And then 7% plus with 1.3, 5.2. This one is percentage, I forget. And then if you press that, plus 7, which is equal to 12.2%. Okay, same goes for the third one. Plus 0.9%. 0.9 multiplied by 6, 0.4%. And then the answer will be plus 6, 11.4%. And And then the last one, 5% plus 1.1. 13 minus 5 is equal to 8. 1.1 multiplied by 8, 8.8%. And then plus with 5%, 8.8%. Okay, so you got the answers already. But the question here is which one will the company choose? So in this case, the question, which one will you choose and why? So of course you choose the highest, right? 9.4, 5.2, 11.4, 13.8. So definitely this one is the highest. By 13.8. Okay, done with this part. Okay, you may snap the picture, yeah, or screenshot, yeah, to get the some ideas and you will study later. Okay, all right. Okay, hold on, Sharik.